G'day everybody, Max right here, coming to you with the world's best suntan. Favorite guest on Do It, Juan Villeverde. Thank you so much for joining us again, buddy.
Thanks for having me, Max. You look nice in red.
Yeah, there you
I
go.
have
I
to
was
say.
supposed to wear it as a shirt or something, not on my face. Well, it's good to have you back here, taking your victory tour after correctly predicting the bottom of the Bitcoin market back in, when was it, November, December? I think, well, basically last time we chatted.
Last time we chatted, I said November.
Yeah, last time you chatted, we said November. So far, proven prophetic. Does it ever go?
It's that's it.
That's it. It's done. Never mind the so far nonsense, Max. It's done. It's dusted. We're off to the races.
It's done. It's not coming back. It's just not coming back. It would need to fall to what, 15? What's going to take it there? Genesis defaulted and didn't take it to 15. And the Fed has pivoted. They're printing money like this. They already undid as of now, which is like early April. They already undid 2/3 of QT. And by the way, for those who think it's about rates don't matter. It's whether or not they're pumping money. Because listen, they pump money and they bail out governments by pumping money, by making sure that those government bonds don't go to zero. That is really what drives asset prices higher. It was never interest rates. This whole narrative that it's all about interest rate. It doesn't matter what the interest rate is. Because
I would push back on that for different asset classes.
Okay, sure.
Like especially real estate has a lot more to do with interest rates than say Bitcoin.
100%. I'm talking Bitcoin specifically. It's about flows and whether or not money is flowing and whether or not the government is able to roll over their debt regardless of the cost. Now, I understand that let's say the US government was paying 5% a year on their bonds. Yeah, the numbers would look horrible if you looked at the percentage of expenditures that go toward interest payments. It would be humongous. It would probably be the largest spending item. It would be interest payments. But if the Fed is buying all those bonds, it doesn't really matter. So it was and that's my point. It's not really about the level of interest. It's whether or not they can roll over that debt. There's this guy I recommend everybody check out, Michael Howe. He's on the blogosphere, he's on YouTube, he's on Twitter. You can check him out. He's done some great work on this, and he's one of those people who says, listen, it's really all about whether or not, because he said the financial system is no longer a new debt financing mechanism, it's a rollover mechanism. I'm paraphrasing. These are not his words. The point he makes is there's about $20 trillion in debt that needs to be rolled over every single year. And the interest rate doesn't really matter because the debt is already outstanding. The thing that matters or not is whether or not the corporations and governments can roll over that debt when it comes due. That's when money printing comes in. Interest rates don't matter. Interest rates matter when it comes to new debt origination. Are you going to get a mortgage at 10%? Probably not. Are you going to get a new mortgage at 2%? Probably yes. That's new debt. But what we're talking about, and the largest portion of debt that needs to be refinanced, let me rephrase that. The thing that matters the most is the debt that needs to be refinanced. I don't remember the numbers exactly. I think it was like, let's just say it's like $4 trillion in new debt every year, 20 trillion that needs to be rolled over every year. So the thing that matters the most is the money printing. It's not interest rates. Interest rates affect new debt origination. Money flows affect the rollover of existing debt. So when it comes to the government, they're just going to issue debt anyways, regardless of interest rate. But if there's nobody there to buy those bonds, they're going to default. The Fed, and I don't know if you know this, but this BTFP program, specifically what that is, the Fed is buying bonds at par. That's what it is. Oh, so you're down 30% on the 30-year bonds? They don't care about that. They're willing to look past it. They'll buy it at par, 100 cents on the dollar. So that debt is being monetized. Even though technically it's not, they're lending against it. That's a technicality. They're printing money. Look at their balance sheet. It's all the way back up. And I predict that by June, probably going to be completely undone.
The quantitative tightening that they did will be completely undone.
Completely undone.
Yeah.
Yes, soon. That's what happened in 2019, which, by the way, I know I'm all over the place now, but this is, according to the cycles model, the same model that I used to predict the bottom in November. According to that model, 2023 was going to be like 2019. What happened in 2019? The Fed pivoted. unwillingly. They pivoted in September. Now, this time they pivoted in March. It doesn't matter. It happened in 2023. And it was similar circumstances. Something broke. Back then, it was repo. So banks were not willing to lend to each other. So the Fed has to step in. This time, very similar situation. They were doing, back then in 2018, they were doing quantitative tightening and hiking rates. They had to undo all of that in 2019. So the prediction was for that to happen in 2023. Also, under similar circumstances. Something breaks and they have to pivot. I would argue that the numbers we've seen now are much bigger than what we saw in 2019. These are huge. I mean, they did 300 billion in 1 week and about 150 the week after that. It's huge. It's huge QE, massive amount of money. If they kept up and then they slowed down, because if they had kept up that pace, I mean, that would have been the biggest liquidity injection program ever by the Federal Reserve. It was incredible. And this is not COVID. There's nothing going on. It's just that the banking system can't take it. Banks are bust because they have too many bonds.
Yeah.
The Fed is forcing those bonds down. And I think the reason they reacted so quickly, they knew they were breaking the bond market. So the minute they saw bank failures, they were like, oh shit, we have to step back in and buy those bonds from private hands at par. Interesting.
Yeah, you thought they were, they knew what they were doing. So I feel it's kind of interesting, like the thesis for you and I was, okay, the Fed's definitely going to break something. They're telling us they're going to be strong and tough on inflation and blah, blah, blah. It's like, but what's actually going to happen is they're going to be tough and strong on inflation until they break something. And then now there's a lot of different things they could have broken, but what was interesting is they broke the banking sector. And that is specifically what Bitcoin is, designed to beat and thwart and to be a safe haven against those kinds of things. And so I think had they have broken something else, we might not have seen Bitcoin do what Bitcoin did. But because it was banking industry, I think Bitcoin would have taken a hit first and then come back. But that's not what happened. Bitcoin just took off.
Yeah, that's not at all. Yeah, it's very interesting because I had a similar thought. I was coming at it from a different angle. I think that the way people see banks is a way to store my money. Right? It's a storehouse of money. That's how people think of a bank. That's not what a bank is. They take in deposits and they lend them out. So they never have your money at hand. Your money has been lent out on some risky or not so risky enterprise. So your money's not really there. So as a user of the bank, as a depositor, it's like, hey, if it's free, you're the product. You're the product. If you're getting paid, it's because you're the product. So the bank takes in deposits, lends them out. And I know that most people listening to this probably know that already. But most people don't understand. Your money's not really there. And so that's what I think stands in contrast with Bitcoin. Because if you have Bitcoin in self-custody, if you have it in your own wallet, the Bitcoin's there. Nobody else can touch it. Whereas in the banking system, and really, that's the alternative. Nobody's going to have their money in cash or gold. I mean, you can have those things. I recommend people buy gold, but it's not practical. You can have $1 billion in Bitcoin in a hardware wallet. And that is there. It's not being lent out to anybody. You have direct custody and only you have access to it. That stands in sharp contrast with the monetary system we have today, where 90+% of all money is in the custody of some bank. It's being lent out. The money doesn't really exist. It just doesn't exist. It's not there. It's not anywhere, which is why when enough people want their money back, there's two choices. Central banks print and we keep going, we keep fighting for another day. They refuse to print, the whole thing comes crashing down. It really is, those are the choices. They're bank runs and the Fed doesn't step in. They begin to fail. One failure leads to another. Chain reaction, before you know, the entire financial system is bust. That's what we saw in 1929 when regulators said, no, we're not going to do anything about this. Okay, everything collapses. Only back then, debt to GDP wasn't as high as it is now. So there will be nothing left if they didn't print money. I support the money printing endeavor, but I warn people that's going to lead to a lot of currency debasement. You probably don't want to have the bulk of your assets in fiat because it's going to get debased. And I think it's interesting because we may see a change in attitude by people now where they realize, oh shit, my money's not really there. I want it back. I'm going to put it somewhere safe. And some of those people are going to buy Bitcoin. I think a lot of people are also just buying bonds. They're just lending money to the government directly or parking it in a money market fund that parks it at the Fed. It's funny how it's the Fed that literally broke this. The Fed is paying money market funds like 5% a year. Banks can afford to do that. So people take their money out of a bank, they put it in a money market fund. Money market fund deposits it at the Fed, where they get a yield.
Mm-hmm.
It's freshly printed money. So the Fed is competing with the banks, and it's driving them toward bankruptcy. The Fed is doing this. It's insane to me. And you might get conspiratorial and say, well, maybe they're planning this all along. Maybe they don't want banks anymore because they want to roll out CBDCs.
Ever.
Yeah, exactly. Because I thought you might think, well, maybe they're doing this on purpose.
Yeah.
Driving banks toward bankruptcy, driving all those deposits away from traditional banks and into the hands of the Fed so that they can say, all right, now we're going to do a CBDC and we're going to pay everybody interest deposits. Maybe this is some part of some grand plan. I don't know. It's either that or the money mentally stupid.
Yeah, that's an interesting thing. I think a lot of the characters that we know, like the Yellens and the whatever else, I mean, they're not the sharpest tools in the shed, I don't think. But then the people above them who have designed and perpetrated the greatest theft and money grifting scheme in the history of the world and managed to get away with it decade after decade after decade after decade, century after century, you're like, well, these guys are probably really smart. It's like these guys surely know everything inside and out and know exactly what they're doing. The puppets they put in place for us to look at and see on TV and vote on or whatever, that might be a different animal. Those guys might not be that smart, but the guys behind the scenes, they know what they're doing.
I have to think that somebody out there does, because I mean, this thing with the reverse repo facility, that's what we're talking about, by the way. Reverse repo facility, let's cut to the chase. What that really is a bank can deposit money at the Fed. A bank or a money market fund, they can deposit money at the Fed and collect interest. Now, unlike a traditional bank that pays that interest because they're also lending out and keeping the spread, right? So they take in deposits, pay 2% of the deposits, they lend out those deposits at 5%, they keep that 3% spread. Fed doesn't work that way. The Fed pays you interest. They're losing money right now. They're bankrupt, technically bankrupt, the Fed. So they can afford to pay anything they want. Here's what's interesting. In 2021, when rates were zero, you could get a premium, I think it was 25 basis points or 50 basis points, if you parked the money at the Fed. So even back then, when they were still doing QE, they had already created this incentive for banks to park money at the Fed itself. Then that just skyrocketed in 2022 because they started jacking up rates. So they've been funneling money away from the banking system and into their own hands since 2021. It's not 2022. 2022 is not when this started. It started in 21. And at the time I noted that, some other people, very few people were talking about it. I was listening to them and was thinking, hey, this is puzzling. My interpretation was, yeah, they're just concerned about inflation. They say they're not in 21. They were concerned about inflation. That's my theory. Now I think maybe this is something else. And a lot of people have been screaming, Fed, please lower those rates at the reverse repo facility. You have to bring them down. Bring them down so that those funds will leave the Fed and go into the real economy. They're not budging. They don't seem to care. So to your point, yeah, maybe this is all on purpose. Maybe they understand exactly what they're doing. And they want it done this way. This is what they want to do. Maybe.
So tell me, back to your timing model here for a second. Your timing model worked perfectly, predicted the recent low back here of 15,000 Bitcoin.
Yeah.
When I'm assuming it's a cycle, and I'm assuming there is a high coming up at some point.
Yes. So the most important high comes this year. I mean, again, remember when I said this year is supposed to be like 2019? Okay, what happened in 2019? What happened in 2019 is you had a flat Q1, strong Q2, and flat Q3, down Q4. Okay, so it went up. It started the year somewhat sideways. It pumped into June. Then from June to about, I can check here, actually. I don't have to do it by memory. So from June until about, let's say September, it was somewhat sideways. I'm talking about Bitcoin specifically. Then we crashed into the end of the year. Not crashed, it just sold off. Then COVID came. and it distorted things. But the year 2023 should play out roughly similar, although I think the rally may be, in percentage terms, I don't think it's going to be anywhere near what we saw in 2019. Bitcoin, I think, went up 5x in 2019. I don't think it's going to get there. I think it might get to 50K. So the high for this cycle should be 50K, let's say late June. It could also be in May. Specifically, it should be on May 24. That should be the high, May 24. I don't think it's going to be May 24. It's going to be either earlier or later than that. But let's say around late May, early June, could be early May too. Around 50K, that would be my prediction right now. That's when it tops out for the year, and it proceeds lower from there. But then 2024, halving year, it's shaping up to be it could be, I think, listen, I think it could be crypto's strongest bull market ever. I don't know if percentage terms it would be that, because higher market cap, you don't see the same types of moves that you saw in 2010 or 2013. Those days are over. They're not coming back. But I don't know. Something in the cycles tells me that there are stronger cycles that favor money debasement in 2024 than I've seen ever in the past 30, 40 years. So there's going to be more currency debasement going forward from 2025, from 2024 through 2032, I think it is. More currency debasement, unlike we've never seen before. So that should translate into one of the best times to buy crypto ever. What we could see, this is speculating, but what we could see is a bull market in 24 and 25 that is similar to the 2016, 2017 bull market. If you remember that bull market, I love that one. There were no pullbacks. Bitcoin just went straight up. There were some pullbacks, obviously. I'm a cycles guy. There's always a pullback, but it was nothing to write home about. 2021 was different. You had that huge May crash, 50% correction from 60 to 30K. It took months to work out. Started in April. I think April 14 was the high. The low was late July. You didn't see anything like that in 2017 or 2020. Or
2016, 2017, if my memory serves, the biggest pullback was like 30% and very short-lived.
Very short-lived. Exactly. Very short. It was like maybe 20 days, not even 30. Yeah. So I think we're going to see a return to that type of bull market. And in fact, this is something else I'm working, because I'm actually right now, after we're done with this, I'm going to go back to working on the model. I'm implementing some changes. I think there may be alternating bull markets where you have a type of bull market that has stronger pullbacks, and then another type of bull market is basically straight up. I think what we're going to see in 24 and 25 is going to be straight up with pullbacks, but not like the ones we saw in 2020, 2021. That's what the model is saying. That's my interpretation of what the cycles are saying. Really, it's not.
Okay. So for 2023, you're expecting a peak around May, June.
Yeah.
Back down to what would be your lower target for the next trough, and when is the bottom of that? When is that next cycle?
So that's going to be hit around. I haven't done a lot of work on that. It should be around December. That's why I say, well, it's clearly going to peak in the first half. Second half is going to be a sell-off, like a slow at first, that it culminates with a more meaningful sell-off. Well, let's say it peaks at 50, which is what I'm working with. Peaks at 50, it goes down to 20. Now, how low can it go according to the model? Oh, it can go all the way back to 15. That's the minimum. It's not going to cross 15. That's what the models, that kind of works like that. It says, well, this low, so the bear market low was 15 in November. So it's not going to cross that. Usually it doesn't come anywhere near that, but it can go as low as that 15,000 level without changing the forecast for 24 and 25, which is really what I'm more excited about. I mean, this is like, yeah, it's cool. This is just a warm-up. It's a warm-up phase. The real bull market starts next year.
2024, that's the super fun time.
Yeah.
Which is consistent with the 4-year cycle as well.
Interesting, right? Because I thought maybe it doesn't play out anymore. Because, I mean, it's a halving. I mean, how long are we going to keep playing this halving card? I don't think it has to do with the halving. I don't think that's what's causing the cycle. I've seen some work that suggests that this is just a liquidity cycle that happens to line up with the halving cycle. So I thought maybe this time Maybe this time is different. Well, according to the cycles model, no, it's not going to be different. Halving year, going to be a great year.
Yeah, Rob Powell advocates for that as well. It's like the halving is completely coincidental. It's more about the liquidity.
Well, interesting. You use the word coincidental because according to cycles theory, yeah, these things just line up. That's just how it works. It's not a coincidence. It's just a way cycles work. Everything lines up. It's like everything breaks at the same time to create the cycle. Everything works at the same time to create the cycle. That's what cycles theory says, which I didn't invent. I just use it.
Gotcha. Now, before we hit record here, you mentioned that Ethereum's pumping today. You mentioned a couple things that I found curious that I wanted to circle back to. One, you were glad Ethereum was pumping a little bit, and you were pleased that Bitcoin hadn't crossed 30,000 yet. Could you elaborate a little bit more on those 2 points?
Extremely selfish on my part. So I even though I thought, because people hear my thing, well, if I make all these predictions, I must trade according to them, right? Well, not really. You get things wrong all the time as well. So I never thought Bitcoin would get to 30K this quickly. I thought it would maybe top out at 30K back when it was at 12, not 12, but 15 or 16, and it was sluggish. So I have a bunch of calls that I sold against my Bitcoin at 30K. So basically, if Bitcoin passes 30K before June, I have to sell a good portion of my Bitcoin. I can then buy it back, and I would, but I just don't want it to cross 30K. Entirely selfish on my part. I'm still happy to see it at 40. I'll still be celebrating. I don't care. Ethereum has no such issue for me. So I have a ton of ETH. It's uncapped, as I call it, so it can go up to 50,000. I don't care. I can write all that up.
So now that I understand your biases a little better, what do you think is going to happen to the altcoin market here? Is it going to pump? Is it going to the traditional thing is Bitcoin pumps first, then the altcoin pumps and pump fast and catch up. Do you think there's been a zeitgeist change where that's not going to happen, or is that going to happen again?
So we're recording this on April 4, and right now on April 4, I can see the altcoins beginning to outperform Bitcoin. So are we going to see an altcoin season? Yes. Personally, I'm using the 2019 script. The 2019 script, it was all about Bitcoin and some ETH. Altcoins performed well. They had their rallies, but it wasn't so exciting. They were still well off their highs. Some of them were making new lows as Bitcoin was pumping. They were still making new lows. The dashboard that I have, looking at a bunch of altcoins, I can see that they're not doing nearly so well. Like many of them are not trading at 2020 at new highs for the year. They're still well below. There's a range between June and November in many markets. If you pull up a chart between June and November 2022, there's a range there. And according to the model, it's a 320-day full cycle. So the way I'm studying these charts is, okay, which markets are trading above that range? Which charts have broken this June-November 2022 range? And there's not a lot that have. Most of them haven't. They're trading well below that. I'm talking about Solana. I'm talking about Cardano. I'm talking about Chainlink. I can go on. Curve, Avalanche. Most of these have their low in June, like everything else. They bottomed in November, like everything else, but they're still trading within that range. It's made between June and November, right? So the altcoins are not looking so well. It's only Bitcoin and ETH that are just cruising to new cycle highs. I think that's the theme for 2019. So you want to stay away from the altcoins. Now, the thing about altcoins is, if you look at them from a relative perspective, yeah, they're still within the range, but they're already up 3x. Right? Because they have more beta, more volatility. But if you look at it as a cycles analyst, I just want to write the things that have broken that June to November range.
Okay.
And so there's not a lot that have. I can give you 3 names that I follow. Matic is one of them, Polygon, Ethereum, and Bitcoin. Those 3, yeah, they're trading at new cycle highs right as we speak. The rest, no.
And so, do you think in this year, 2023, the alts are not going to have a big pump later?
No, I think they will. I would be surprised, to be honest, if they don't break above that June to November range. But No, I don't think so. I don't, because this is not a bull market year. This is I call it a transition year. We're transitioning from crypto winter to crypto summer, let's just say. So it's spring. In spring, the altcoins don't tend to do so. I'm also tracking some, just free tips for people. The privacy coins tend to be the least correlated to the rest of the market. So Zcash and Monero, they tend to be the least correlated. They're not doing so well right now. So it's all about Bitcoin and ETH. I think ETH has become, I've been calling them the twin benchmarks for crypto for a while. I think you have to look at both ETH and BTC. I'm not making a value judgment on these projects. I'm just saying, you want to know where prices are heading, you need to look at these two. You can't just look at Bitcoin only or Ethereum only. When I started doing this work, it was just Bitcoin. Whatever Bitcoin was doing, that's what the market was going to do. Now you can look at ETH, especially since Ethereum made a low in June 2020. Bitcoin made a double bottom to that June low in November and actually made a new low in November 21. November 21, 2022, made a new low. ETH held. So part of the reason I thought the forecast was going to be correct is that ETH was holding the low, whereas Bitcoin had crossed it. So at the time, what I was writing is, it looks like we're on track because, hey, look at Ethereum, it's holding above the lows. So they're both, you should have both in your radar. Part of the reason I'm saying that is because if you look at the relationship, ETH BTC ratio in 2022, which is a bear market year, it looks nothing like past bear markets. In past bear markets, everything lost against Bitcoin. In the 2022 bear market, same is true, except for ETH. At ETH, your analysis, it holds its value against Bitcoin. It just basically trades. Sometimes there's a Bitcoin season, sometimes there's an ETH season. You can see some changes in that ratio, ETH BTC, but overall, it just held. So you're not better off holding ETH, you're not better off holding Bitcoin. They're similar. They're the twin benchmarks for this market.
Okay, so that is very much a zeitgeist change then.
Yes, very different.
Very different.
Very different. Yeah.
And it's interesting. Do you think, I think for different reasons, right? Like, I don't think Ethereum is benefiting from, like, the fact that it's a banking crisis right this minute is just the perfect narrative for Bitcoin, but that's not true for Ethereum. So what's the narrative for Ethereum?
There's a narrative for Ethereum. I think it's just, to be honest, I love both, but you know where I'm going with this. I think there's a lot more development around Ethereum, and it's just catching up to Bitcoin. It's just the fact that there's more things going on. For example, I can tell you that Ethereum in Q1 23 a bunch of teams rolled out ZK rollups, the EVM compatible ZK rollups. I mean, this technology makes Ethereum so much faster, and we're talking layer 3 now in 2023 for Ethereum, layer 3. So layer 3 is where the rubber meets the road as far as real world applications that are practically feeless. So when fees go way, way, way down, guess what? You can start now as a project, you can pay those fees and let your users use the app for free. That's what we need. It's one of the things we need for mass adoption. Ethereum is there. Now I'm excited about, I haven't looked that deeply into this, but I hear they're doing NFTs on Bitcoin. That's great. I love it. But if you look at the pace of development of Ethereum, I think it's where it's at. It's where the action is. So that's how I explain it. I think it's because, and I mean, just as an anecdote, why did Ethereum not break the June 2022 low last year in November? Why? Because it had a huge rally from June through, looking at the chart here. So from June through August, had a huge rally. It doubled in price. Bitcoin only went up 20%. Why was that? Oh, that's because they were doing the transition to proof of stake. Now, I don't like the transition to proof of stake. I think it created a ton of issues. We could have stayed with proof of work, and it would have been more secure. So I don't personally think it was such a good thing, but it was a catalyst because it shows you that they're moving ahead, they're moving forward, they're upgrading, they're still doing work. So why did Ethereum do better than Bitcoin in those sideways months between June and November? Well, it was the advancement of the technology, the upgrades. That's how you can explain that. And I think the reason it's doing so well today relative to Bitcoin, there's more things to be excited about than Bitcoin. I think Bitcoin is being helped by the catalyst. The catalyst is perfect for Bitcoin. It's an asset that you hold in direct custody. It's a hard asset, limited supply. You know what the monetary policy is going to be between now and 2140. So that's great. None of the issues you see in the banking system. That's fantastic. So their narrative is perfect for Bitcoin. I agree. It's not bad for ETH though. It's not bad.
Mm-hmm.
I don't know.
What about, so your timing model is predicting a local peak for crypto in June.
Mm-hmm.
Do you this is what, because I mean that's the most important question, right? But a fun question to follow it up is, what do you think is going to be the trigger at that point? What's going to happen in the markets that would justify that?
Interesting. So I've been wrong about this already. So remember, what I thought was going to trigger the rally is the Fed slows down the pace, stops hiking rates. I did not think they would pivot. I didn't think they would do QE. Yes,
and can I just clarify that for the viewers? As you said earlier, it's the quantitative tightening or easing that is much more important than the interest rates, and they have pivoted on that. They've slowed down with the interest rates, but they haven't started dropping interest rates. So when you say the Fed has pivoted, it's because you're attributing more attention to the quantitative tightening or easing. So yeah, keep going.
Right. So I was wrong about that. I didn't think they would print money. I thought they would not. They were going to stop hiking rates, and that's what. So this is why I thought, okay, that's going to lead to a rally that people would notice, but it's going to get to 30K and stop there. There's no way it stops at 30K. We're in early April. We have until June, so we have a couple months to go, and we're already at 30K. So it's going to go to 50 or something like that. Yeah, don't take anything for granted. You should not take markets for granted, but it looks like it's going to cross 30. The reason is the catalyst is far stronger than I thought. So my initial view was they're going to slow down. They're going to stop hiking rates. That's going to lead to a Bitcoin rally into June. Then inflation will come back. They're going to do more rate hikes, and that's going to make Bitcoin drop from 30 all the way back to 15. I've changed my view now. I could be totally, by the way, I think I'm a decent cycles analyst. I can predict the tops and the bottoms, but the reasons that cause these tops and bottoms, I'm always wrong. This is
purely academic.
This is purely academic. I'm always wrong. When I say why something's going to happen, I'm always wrong. And sometimes I get it right, but I think I get it wrong more often. I think, however, there's going to be a full-fledged banking crisis. Like the shit is going to hit the Fed in June or late May. And at that point, you're going to see a liquidity event, a liquidity-driven sell-off, where people just sell everything. It doesn't matter what it is. That's what I think we're going to see. If you want to know what I'm talking about, pull up a chart of gold in 2008. In 2008, you could argue that it was Bitcoin did not exist, crypto did not exist. It was the best catalyst for gold. This is why you should own gold, because it's not in the bank. It's just like Bitcoin today. It's not in a bank, so it's nobody's liability. You can hold it in somewhat direct custody, and it's not being debased, right? And it's not going to fail or anything like that. However, gold did sell off in 2000. Why? Because that's the nature of markets. When there's a liquidity event and everything is collapsing, people sell everything, even if it's completely unrelated to what's happening. Why would you sell your Bitcoin if there are cascading bank failures across the world? There's no reason to do it unless you have to sell because it's the only thing you have that you still have left to sell because you lost everything else, right? And that's what I think we're going to happen. Just pure contagion. That's what I think we're going to see. Again, I could be completely wrong, but I think this crisis that started in March will hit some type of climax. It'll reach some type of climax by late May, early June. And that's going to lead to a sell-off in all asset classes, including Bitcoin. But Bitcoin will hold its lows. My view for the stock market is probably makes new lows. So it probably continues the bear market that started last year, whereas Bitcoin goes from 50 to 25, let's just say, or to 20, which is a serious sell-off. I mean, 50 to 20 is 60%. That is a 60% correction that I'm calling for sometime in the second half of this year. What would cause such a big sell-off, such a dramatic sell-off? I think it would have to be Not a Fed pivot, nothing to do with the Fed. It's just something really breaking because nothing's broken yet. And yet you're looking at what's happening is they're not doing anything about this. I saw a chart this week that we're seeing the largest deposit outflows in 50 years. They're not doing anything about it. You look at the headlines and they go, well, that's encouraging it. They're encouraging it. The Fed is encouraging it. They're not doing anything. They still want to save their face. They raised rates recently just to save face, which is ridiculous. This is what's causing the problems. It is the fact that banks cannot afford to pay 5%. They're going to go broke if they do that. Well, they're broke anyway. Banks are done. This is done. There's no reason for you to keep the money at the bank, and there's nothing that's going to make these banks come back. They are dead.
And even though on the SVB banking crisis, Bitcoin went up, you think it will be a liquidity event where people just have to sell to cover things and everything goes down.
Exactly. Now, I'm still young enough that I wasn't active as a trader in 2008. But looking at the charts, I can see that as the banking, because it was also a banking liquidity crisis, right? And when it started, it rallied. But I think when we hit May of 2008, gold started selling off as well. So I think Bitcoin will react in this crisis the same way gold did back in 2008. It sells off. I call it in sympathy. It sells off in sympathy. There's no reason. There's no catalyst. There's no reason for it to go down. It just goes down because everything else is collapsing. And the Fed, the Treasury, they're not doing enough. They're unwilling to do enough until it just blows up in their face and they have to do something. They get dragged down to Congress to explain what's going on. That's when they have to do something. I think the TARP vote failed by Congress. And boom, that just precipitated the trapdoors open, right, in the S&P back in 2008 when they refused to bail out the entire system. So then there was a huge crash, and then they passed TARP. And TARP was only like $500 billion. It was really the Fed pumping money to the tune of trillions that bailed out the system, and China. China's already printing, though. So.
Yeah.
They need to print. Listen, here's what they need to do. They need to print for real. They need to lower rates and print for real. Until they do that, things will continue to break. So from a broad perspective, you can say, well, what's going to happen in June? What's going to happen in June is they're not doing enough. They haven't fixed anything. And because of that, it's going to get worse, much worse. Then it's going to lead to, then nobody's going to be partying. The crypto guys are not going to be partying when it gets really bad. Everybody will be scared, shitless, and then they're going to pivot. And that's going to cause the next bull market in Bitcoin.
I'll throw a little something. Well, you know what? I'll save that for a little bit later. Let's talk about de-dollarization. Okay. We've got China, we've got Russia, we've got India, we've got Brazil, all the BRICS nations. We've got countries, I should say, just Saudi Arabia, clearly moving away from the dollar. And it's all happened very, very fast in the last month or two. I feel like that could be a trigger. I feel like that could also be a trigger for war. And it could be that war is this out of left field thing that is possibly causing the event that you're talking about. But anyway, did you want to share your comments on the de-dollarization of the world and how quickly that can happen or is likely to happen in your opinion?
Yeah, this is an interesting one. I have to confess that I know it's happening quickly, and I'm surprised at the pace at which these countries are looking to de-dollarize. But the way I see it is they're kind of diversifying their bets. They're spreading their bets. They're not going to go, yeah, let's just embrace the yuan. Yeah, because the yuan is so much better, right? Every problem you have with the dollar, the yuan is worse. The euro is probably worse. So do I think this is going to lead to constant debasement of money? Yes. But I think it's it's a trend that's in the background. Is it going to cascade into some type of event that causes massive failures across the financial system and the economy? I don't know. I just don't have such a strong view on that because people still want dollars. I still see strong demand for dollars. I still see dollar shortage across the world. Dollar shortage means there's not enough. People want more. So I don't see the world ready to just completely ditch the dollar yet. I don't think we're there yet. And I do think, however, that the trend that started years ago, I mean, I've been hearing about de-dollarization for years. I think it accelerated with Russia. I think this is all precipitated by the war in Ukraine between Russia and NATO. That's what it is, really. NATO fighting Russia. NATO confiscates all of Russia's dollars. That leads to countries like Saudi Arabia going, hey, they can do it to us too. So let's spread out our bets, spread out our risk, because the Chinese are going to do the same thing to you. If you're Saudi Arabia, you think the Chinese are not going to confiscate what you want if you cross them? Of course they are. Every fiat money has this issue. It is issued by a nation state or a group of nations, and they control the currency. They control who has it or who doesn't. So all forms of fiat money have this issue. Where I think this is going, interestingly enough, I think this is going to lead to countries embracing crypto, Bitcoin specifically. But they're not going to do it willingly. They're not going to do it willingly. No country wants to give up that power. What every country dreams of is like what the Chinese are doing. The Chinese want to be the dollar. They want to dethrone the dollar and replace it with their currency. They want something they control. However, I believe that when the world moves away from the dollar, it's because they're going to see that this money is this is centralized money, and the issuer gets to decide who uses it and who doesn't. So once the world comes to see that, they're going to look for an alternative that doesn't have that issue. Now that's crypto. And it's not all of crypto. It's things like Bitcoin that cannot be confiscated by the will of some nation state, right? So we're not going to go from dollars to yuan. We're going to go from dollars, or from, let's say, from fiat to crypto eventually. Why? Because these nation states, the BRICS, they don't trust each other. They don't trust anybody. So when I see them saying things like, well, we're going to settle in yuan as well, we're going to settle in euros as well, I just see it as another transition. This is not the final solution. It's not the final solution because all of these forms of fiat money have the same problem, which is the issuer can just confiscate it from you at will. You want something that's truly neutral, global, decentralized, that you can move it at the speed of light. If that's what you want, then you need crypto, you need Bitcoin. But they're not even discussing this yet. Now, I know that some people in the crypto industry think this is going to happen next year. I'm like, no, this is going to take a while. They're going to really need this. So what I think is going to take is, people are being pushed away from the dollar because of what the White House did to Russia's reserves in February of last year, right? So they're moving away from that. Now they're moving toward the yuan. Now something's going to happen to the yuan, and they're going to be scared of the yuan as well. They're going to move to the euro. They're going to see what a mess the EU is, and they're going to say, we don't want that either. So we need something else. We need to come up with a new solution. And it's not going to be the Saudis raising their hands saying, hey, how about we use our currency? No, nobody's going to trust that, right? So what we're going to see is a radical transformation of what money is. And what countries are going to demand is something that is neutral, a neutral reserve currency. And that cannot be issued, by definition almost, cannot be issued by a single nation or a group of nations, because that's going to be confiscated. It's going to get politicized, right? So eventually they're going to embrace crypto. I think that's going to take 10 years, to be honest. We're heading there because we see the need. You see why they're running away from the dollar, and you go, well, they're not going to go to the yuan because that has the same set of problems, if not worse. So they're going to look for something else. They're doing gold. Yeah, gold is slow, though. I mean, it's just slow. Come on.
Yeah, see, I could see maybe in this first round, India and Russia and Brazil and whatever moving towards that. But let's say that march continues and they're successful, and there's a whole bunch of dollars that comes back to the US, that, unwanted dollars from overseas. Let's say it hits that tipping point, and all of a sudden the dollars are coming back to the US, and Americans start feeling that squeeze of serious inflation here. I feel like that we will not go to one. Like, whether or not I can't imagine the politicians doing it either, but especially the individual. The individual is when they will see and feel the problems of inflation here at some point. I mean, we already are to a degree, but I'm saying it's going to get worse. When that happens, they're not going to go to one. America is educated enough that they're going to Bitcoin. The individuals at at serious levels. And so I think that will happen, but I can see another leg in this journey where Indians and Brazilians and they are kind of somewhat, for the most part, in the same way the whole world is at the moment, tricked into going to some other fiat currency.
I think that what I just discussed is what nation states are going to do. I think what individuals are going to do is different, and I agree with you. They're going to go to crypto immediately. The reason I'm saying that is because you're seeing it in Latin America already, right? So if you look at the countries that have issues with their money, in other words, their governments love debasing their money, they still use that money for like everyday things, but they don't save in that currency. They use something else. And demand for crypto has never been stronger in Latin America. That's the place that I know. I'm pretty sure it's the same thing in Africa, where countries just love debasing currency as well. And so people immediately transition to crypto. Why? It's easier, right? I don't know how to get yuan in Brazil or in Argentina or in Colombia. I have no idea how to buy yuan, but I can buy crypto pretty easily. In fact, I can just transfer it from my bank in most of these places. Binance has like connections everywhere. So I think it's that. Interestingly enough, it's easier to get crypto than another form of fiat money. So in most countries, you can either get dollars or your local currency. Now, again, a lot of people want dollars. If the dollar begins to inflate and debase, and people begin to notice, because I'm telling you, outside the States, there's a dollar shortage. Most people don't notice that the dollar is actually losing value as well outside the States. And that's what I think. That's why I see strong demand for the dollar for now. Because people still want it. But more and more people are turning to crypto. And they understand why. They understand that, well, if the government can debase this piece of paper, they can debase all forms of paper. They understand this. So, but this is one of those underlying trends as well. So I'm agreeing with you. I think that if you start seeing strong inflation in the dollar because nobody else wants to use it or it's being used less. Listen, I think the reason you're going to see inflation is related to nation states not wanting the dollar anymore. What they're not going to do is they're not going to buy U.S. bonds. Also, the Fed is crashing them. So the Fed is crashing the bond market, and they can also be confiscated from you. So why would you buy bonds as a Saudi? If you're a Saudi, if you're the Chinese, if you're the Russians, if you're Iran, if you're one of those nations that worries that they may cross paths with the states in the future, why would you finance their deficits? Why would you hold their debt? Why would you have claims on that system when they could just be confiscated from you? And it will. No reason. So who's going to buy all that debt? The Fed. How are they going to buy it? They're going to print money. So this is where this trend of de-dollarization matters as far as inflation goes, because there's less demand for U.S. debt worldwide. But Uncle Sam's not going to stop spending money. They love spending money, and they probably don't understand how these things work. So who's going to monetize all that debt? The Fed. The Fed's going to do it. And BTFP is step one. They just said, it doesn't, forget how much you're down on your bond portfolio. We're going to buy it at par, 100 cents on the dollar. Here you go. Direct debt monetization. That is BTFP. And it's going to get extended. BTFP will get extended, and it will become a permanent feature of the US financial system, where you can always, at any point, and regardless of losses, send your bonds to the Fed, tend your bonds to the Fed, and get 100 cents back.
Those of you who are not following this at home, what Juan's talking about is the solution to the banking crisis that happened a few weeks ago. What the Fed did is they said, we will buy your bonds back at 100% value, even though the market is pricing it well below that, 15, 20% below that. And as Milton Friedman once said, there is nothing more permanent than, but that was limited to 1 year's time. I forgot to mention that. That is limited to 1 year's time. However, as Milton Friedman said, there is nothing more permanent than a temporary government program. All right, on that, I think I've got to wind it up. Juan, thank you so much for being here, guys. Be sure to hit the like button, hit the subscribe button, and I'll see you soon.